Trading Fibs video. This is the chart on the US dollar Japanese yen spot. Looking for the long-term trend here. I've got the Elliott wave degrees located indicated with cycle, primary, intermediate, major, minor. These are the cycle degrees we're going to mostly be working with today. Here in red, I have two counts. The alternate will be in the oval, and my main count, I don't want to say primary because that's an actual degree, so my main count will be without the oval. So you can see here, well, we're going to be focused, let's do the main count first, and we have a W, so we're looking for a WXY pattern. Alright, so we have the W down at 75.56.3, and we're looking for our X up, whether it retest the high here at 358, or we're looking for 1.8% retracement around the 200 to 230 area. Okay, let me go ahead and get that there. Yeah, so 213 to 250, something like that. Let me get rid of these Fibonacci retracements real quick. Oh, whoops. Okay, so just give you an idea. Let's zoom in on the bottom here. This W. This is a yearly time frame right now, so each candlestick is 1 year. Here's our bottom at 75.563. And again, the ovals are the secondary count. So the blue is an intermediate degree, and the purple is the primary. So let me zoom out again real quick. You have cycles the biggest, primary, cycles the biggest, and minor being the smallest degree. Okay, so here's our primary in purple. So we're looking for a W up, and right now, as far as I have gotten, is the W and X in intermediate, and I am contemplating whether this candlestick is the intermediate Y or a major degree W, and we need a WXY here to complete our intermediate Y. So I went ahead and put our degrees of trend where I think we might be heading to. So I don't think our intermediate Y is complete, or our primary W. So in case this is the alternate count though in the ovals, I do have an A and a B, and we're looking for a C down. Okay, so with that being said, let's go ahead and we're going to zoom into the weekly real quick. Let's try to get everything here. Here's the WX, and looking for a Y maybe over here. And our alternate is A, B. This would be like an expanding flat here. This move A, B, and a C down. If it's the main count, then we need our major degree W, X, and Y. Yeah, this yellow Y. Either it's here, complete at on 624, which to me just doesn't look right. So I'm gonna go ahead and put all the, like I said before, our main counts are ending somewhere over here. I don't have a timestamp on it yet, but I just think we need to make a higher high. So focusing on the main count first, if we need a W, X, and a Y here, this means this would be some kind of minor move like this. Maybe W, X, and then Y up here to finish off 4 degrees of trend. And if that's the case, I'm thinking we're forming a triangle for this X. So really the X will kind of be a wedge. So let's zoom in here. So I'm thinking this would be an A and a B, and we need a C, D, E. So let me activate this here, be more like this. So I have, ignore this A, B, C, D, E here, okay? Because that would be another triangle to the downside. But for the upside, we have an A, this B, this C, this D here, and then maybe an E to finish the triangle, and then we move higher. Okay. So go ahead, pause the video, write that down. That's going to be one scenario. Okay. This being A, oops. Well, see if I can label it real quick. So that's an A of maybe a minor degree. Not quite sure right now. So we're just gonna duplicate these, but just know that would be a B. This one would be a C. This one would be a D. And this one would be the E. Okay, again, so that's my main count. All right, now, if it's bearish, if it's indeed the count in the ovals, then we could still look for a possible triangle, but it would be going the other way. So let me get rid of these trend lines inside of here. And then it would be where you kind of see these, my lettering here, my notation here. It's an A, B, C, D, and E this way. So the triangle would finish like so. So it's A, B, C, D, and E. And then we continue lower to finish this alternate C leg, okay? And that would be down to hard to say. We'll just do a 1-to-1 on this one, or maybe a 123. So maybe a 135, anywhere from 135 to really 118. I mean, I won't know until we break this trend line here, this wedge. But again, that's the bearish count, and it's not really my main count right now. And my trading strategy is not that far out anyways. So I'm going to get rid of those. And so what we're going to do is just really base our next few weeks off maybe these 3 legs here, okay? And is what I've kind of noticed is that, let's go ahead and go down to the daily time frame here now. So the reason I'm thinking that we're still in an uptrend is basically this retracement off of that leg. Okay, it's how do I want to say, it's really indicating that there will be some kind of triangle pattern out of the next few weeks. So let me get rid of that, and then really to fine-tune our short-term trading, we really just want to focus off this leg here. Okay, so let's start with that and go down to the 4-hour time frame. And the first thing I want to notice is this consolidation. How far did it retrace? It was right at the 38.2. Usually that tells me, if we're not in a triangle pattern, usually this next move would be more of a what am I trying to say? Maybe a bigger swing, or an extended leg is what I'm trying to say, based off this first one. So if I'm looking for 3 moves, 1, 2, 3, one of these 2 legs would be an extended leg. Okay, but I don't want to get into that right now. So, and I put that as 61.8. That is not right. Let me remove that. That was 38.2. So I do see those 38.2s in a lot of triangles. That's really all I want to add to that, but we will notate it. Other than that, getting down to a finer time scale, we really want to base now our next move off these 3 moves here. So let's zoom in here, zoom it out, and we have an A and a B and a C here. All of these were 61.8 retracements. This was a 61.8 off here, a 61.8 off of these 2 combined, and then this leg here was too deep for a continuation of some kind of impulse. So it either tells me it's a change of trend or a triangle, one of the 2. I'm going to go ahead and base it as a triangle because I feel like my main count is in an uptrend altogether. So now this correction right here was a 61.8 based up from this move here, and this correction here was 61.8 based on the previous leg. We'll zoom in a little bit so you can see that. So now we're going to go down to a 30-minute time frame and try to anticipate what our move might be in the next couple of hours when the market opens. So we're going to go down to the 30-minute time frame. I want to add that my indicators did show a push to the upside on Friday, so I'm thinking we may gap up on opening. So based on Friday's close, which was 144, somewhere around there, low 144s, but based from Tuesday, we have our a flat here, I think, or maybe a triangle if you want to count this as an A, B, C, D, E. So an A, B, and then a C up. A nice extension here for C. And then your 61.8 pullback. So we're going to go ahead and say that since we've had some patterns show 61.8 pullbacks, you would want, or for me, don't do your own trades, but for me, I'm going to look for a long position and try to retest the 145 area zone up here. That's my target. So if we had already started the move up, let's see here, I think I have it labeled as maybe this. Yeah, 3 moves here as an A. This would be like sub minuet, and maybe I think I label it in a dark blue. So this would be an A, a B, and a C to make the minor degree A. Okay. So ABC here, we have our pullback at 61.8 here, I believe. Yes, you can see that right here. It went past it just a little bit, but that's close enough for me. All right, and now we've continued our move up. Okay, now here's 2 possible scenarios. I'm going to put this one in, let's do, I don't know, blue. I don't want to do green or red because they're really both going to be bullish scenarios. Let's just say scenario 1 would be maybe we open up a little lower than we closed on Friday, but as long as we pull back at least to the 61.8, which is I have here at 143.9, and not any lower, then that would be a great risk to reward right here. If we go lower, then chances are we were probably going to break this low at 143.7. So here's a nice risk reward, whether you go long or short, really. Okay, I'll let you guys figure that out on your own. Now, if indeed we gap up, because it's sometimes the trades are too obvious, they go ahead and gap us up over the weekend, then it's possible. And this one I'll just keep orange. It's fine. Then if we gap up, then we just kind of hope that we can get a pullback off, which would be 3 moves here, right? 1, 2, and then an extended C leg, and then hopefully we can correct this move at least 50%, if not to the 61.8, and then jump in long there. And then if we get a jump in here, then our target for the upside, I would say at least 144.63. That would be my first target. Obviously, the first target's 144.43, which is this leg. But if we get in at 50% or 61.8, then odds are 144.63 would be the next target. And then, if it passes each one, then you raise your stop loss, and we go to the next fib, which is 144. The next one after that is 145. 200 would be the 145.4, and eventually we would hit our 146, would be the original target at 146.07. But that's, as you're moving your stop loss up too. Okay, that's my strategy. That's how I hit each target with these fibs. If it goes past 1, I move my stop loss up. Okay. If you want to know more about that, you can just shoot me an email and ask. But let's see if I've missed anything. Like I said, we've got a couple, maybe an hour and a half till open, and oops. I think that covers what I need to cover. So originally I did have a target of 137. I think we had come close to it. I mean, I gave that target 6 months ago. So it's been a while since I've done a reading on this US dollar Japanese yen spot. So this is my update, and like I said, there is still an alternate count to where we could see, you know, a low. I don't even want to give a target yet, but it would be lower than 140. So that's another thing, is that the trading range. We do have that consolidation. I'm going to go to the weekly real quick. And there is a zone at around the 150 area to 140 area. Okay, draw your box there, look at your resistance levels and your support levels, and this is going to determine probably whether we have a break up to the upside or a breakout to the downside. Okay, that might help. And then one other thing is that this intermediate W, maybe the alternate count, if it's correct, this C down here, then really we're trying to retest this level here at 125. Okay, so keep that in mind. I hope that helps, and until next time, thanks for watching.